Thank you for tuning into the Starkey Multifamily podcast. I have Sam Bates here with me. Sam operates over 374 units, and we're going to kind of talk about how he got there and a little bit of the systems that he's created and how he got there. So, Sam, thanks for coming on.
Thank you, Reed, for having me on the podcast. It's an honor and look forward to sharing my knowledge with you.
All right, thanks. I appreciate it. So, Sam, let's roll right back to the beginning. So, what got you started into real estate?
Well, I was a finance undergrad, and I thought about going and getting my master's in real estate, but I decided to get an internship at a large financial institution. And after the internship, they offered me a full-time position, so I accepted that. And then I decided to go back to school, and I got my MBA and then master's in personal financial planning. And I was planning on being in equities for the rest of my life, but the market crashed. I couldn't find a job except 100% commission at 23, 24, however old I was. I figured I'd starve. So I got a job at a consulting firm, and it just wasn't the right fit for me. I was working a ton of hours, doing different things I didn't enjoy. So I started researching real estate, and I found that you could invest as a limited partner in apartments. So I invested in one syndication as a limited partner. And through that process, I started buying single family homes simultaneously, because about halfway through the first syndication, I realized it wasn't going as well as it should have. And I wanted to have the control, and I wanted to just be responsible for my financial future. And at that time, I could buy single family homes for under $100,000 with the rehab. And I just started doing that. And I either bought and held, flipped, or I did one spec build, and I totaled about 18 of them. And through that process, I realized it'd take a long time to get to where I wanted to eventually be. So I started looking at buying small apartments, and nothing materialized, but I ran into a guy who I used to work with at one of the consulting firms, and he was kind of doing the same thing. So we decided to partner up, and that's the path we decided to take, was to go into smaller multifamilies. We looked for about 2 years. This was 14 to 16, and at that time, they thought the market might have busted. So we were underwriting the deals conservatively, and then also a lot of the brokers weren't giving us a chance because we were young. They didn't think we could raise capital. We weren't intertwined with any of the real estate groups that raise capital for you. So we just weren't getting a deal. And then that's why we brought in our third partner, who's a developer. And we actually started developing apartments before we bought any. And then that kind of led us down the path of multifamily.
So you have 374 units now. Have you developed all those, or how did you acquire those?
We've developed two. Our first development was actually a mixed use, 10,000 square feet of retail space in a 60-unit apartment complex. And then we developed another 48 units, and then we've acquired 4 properties for the other however many units. And right now we're building a total of 300 units as well.
All right. So I'm going to back up a little bit, because we said we'd talk a little bit about it. The deal that you were a limited partner on, so you said there were some problems with it. Can you say what they are, and maybe some lessons you learned that you could tell somebody that's looking to invest passively, what they would do to prevent getting into trouble like that?
Yes, definitely. And I think who you partner up with in a syndication is key. Especially if the market corrects, or when it corrects, an experienced syndicator or experienced investor will be able to weather the storms possibly or probably better than a new person or new syndicator. So I partnered with a guy who had 10 to 20 years experience. I think there were some issues that he had never dealt with. The asset was in a pretty good area of Dallas, but there's pockets in that submarket that have a lot of issues. And one of the issues where we had a lot of gang violence, the tenant profile, he didn't think was as bad as it actually was. And he just started his own property management company. And frankly, they couldn't manage the tenant base. So after he managed it for a while, he fired himself, brought in a third party. They couldn't handle the tenant base. So we had to remove that third party. We actually removed the GP from the syndication. And luckily we had, one was an LP who had a background. He had an MBA from Stanford and maybe an undergrad from Stanford or Northwestern. He had worked at AT&T for a long time. And then one of the guys under the GP, he was quote unquote, I guess, a co-GP, and it was his first dildo. So they combined forces and took over. And with their assistance and the other third party, we're able to right the ship. And over that time frame, we still annualized an 8% return. But when we bought the property for like, I think 13,000 a door in Dallas, we should have done a lot better than what we did.
Oh, that must have been quite a while ago. 13,000 a door in Dallas?
It was 2010. And now I'm looking in that area actually to buy assets. And assets now are trading in the high 90s or hundreds that are in probably worse shape than what that property is now. So it could probably trade now anywhere from 1 to 120 a unit.
That's insane. So you said you actually kicked the GP out. How did that happen?
Well, in the operating agreement, there was a threshold of the limited partners that had to approve his removal, and we met that mark and by voting for it. So it was actually a pretty easy process. The thing that hurt after we removed him, obviously, once he was removed, he didn't want to stay in with the apartment, and we had a bridge loan. So when the bridge loan term came, nobody could guarantee long-term debt. So we had to sell it. If we would have been able to hold on to it, we could have done phenomenally well with it. And I think the final third party that we brought in did a good job. The two people that became GPs did a good job, but obviously it was the market also. I mean, nobody could have predicted in 2010 where the market is now in 2019.
Yeah, that's for sure. So that's a pretty good story. I've never heard of anybody removing the GP. So that's
it doesn't happen often, but it has, or at least I've experienced it.
Yeah, it's kind of cool that option was in there and that you were able to get that. But how do you? So I mean, you don't typically know who the other LPs are. How did you get together to create that vote?
Well, luckily the way I invested was through a real estate organization in Dallas, and all the limited partners were in that organization. So some of them had previous relationships, but also we would meet on a quarterly basis or maybe even more frequent than that. So people got to know each other, and just with the constant communication and emails, there was talk that could go back and forth, and you can make a decision easier than, I know some general partners don't communicate that often, or they don't have meetings. That's one thing. With some of our investments, I try to have at least yearly meetings, sometimes more than that. But some of the LPs either don't want it, or the property's not close, or the LP's up in New York or Washington or wherever, where it just doesn't make sense. So we'll have monthly communication, and if we're going through a rehab or different things that happen throughout a month, we'll communicate more if that's necessary.
So, I know we're getting a little off topic, but so is there any advice that you would be able to give, like something that you could have known going into it that would have told you, hey, this probably isn't the best place for me to put my money into?
I think I could have vetted the sponsor a little bit better and asked more questions. But I felt comfortable with the location it was. And at that time, buying it for 13,000 a door, you would have thought you could do really well in it. And I don't know if I would have changed anything, because I still think 8% isn't bad. I mean, that beats the stock market a lot of years, but it just gave me the mentality that I can't control another person. I couldn't control the stock market when it crashed. So maybe I'm a control freak, but I'd rather be able to be the one I'm having to look myself in in the eyes than somebody else, and I will hold myself more accountable than somebody else might.
Well, I think that's probably pretty accurate. We were just trying to discuss that, my partner and I, of what is the emotion that we're selling? So apartment is the commodity. What is the emotion? And essentially, that's what it came down to is the 401k. You're just putting money into the abyss and hoping it comes back. And you're trusting somebody you've never met, talked to. Whereas here, at least you get to know the GP partners. You get to talk to them. You can call them. You can ask them questions, and you feel like you have a lot more control over the deal, even as a limited partner compared to a general partner. But
I completely agree. With stocks, if the CEO of Coke or another large company does something that he maybe shouldn't have, the stock will plummet. Or if there's something that happens in Asia or Europe, I mean, the American markets are affected as well. Whereas if you have a hard asset that's backed by real estate, it's a lot harder for it to have an impact on or be impacted by something that happens in Asia. Or even if a general partner does something foolish, it's not going to affect the value of that asset like it would if the CEO, CFO, general manager, something did something foolish of a corporation.
Yeah. So you mentioned the two other partners, the one that you had worked with, and then the developer, and you've created the three of you have done all those 374. Those are all yours.
Yes, they are.
And you've done the money raise and the sponsor.
Yes. So the acquisitions we've syndicated and raised money for. One of the developments we've syndicated. The other developments we've JV'd with one family. And then we've done a land development, which was a 200-acre lot development that we turned into a residential subdivision that we did a joint venture. So we've used different creative, I guess, financing techniques to fund the deals, but all the deals we've done, we've brought capital to the deal as well. We believe in what we're investing in, and we want to take part on the upside and not just on the promote.
Yeah, absolutely. So to do that, we've talked. Was how we originally got talking was a little bit about your systems that you've been starting to put into place, because it really at that size, it really becomes you've got to start having systems of doing things. You can't just put them together. So, what are some of the ones that have worked for you, and how's that gone?
I think the first system that we put in place that's been phenomenal for us, and I don't even know if you would call it a system, but one of my partners, the guy I met at the consulting firm, he's a CPA. I had spent 10 years in tax. So we started doing the bookkeeping, and we realized it was bogging us down. It wasn't the best use of our time. So we've outsourced bookkeeping and brought a lady in, and she's been with us about a year, and she's just taken off the burden for us. And she's been able to review the third-party property managers' financials and receipts in greater detail than we might have time for. So that was a big help to our business. We've started writing SOPs, or standard operating procedures, where we follow the same steps and processes for different tasks and activities that we do. Some of the property managers we've hired are newer to the business like us, so we came up with a SOP that we expect the property manager at every property we have to do certain things each month, each year, each week. So they just have a better idea of our expectations. I think one thing that's going to be a big benefit that we're doing right now, mainly to our investors, and it'll save us time, but we're implementing investor management software. And that will allow the investors to log in and look at all their investments, kind of like you would with Charles Schwab or some stock portfolio you have, where it gives you real-time information. It also streamlines the PPM process. We were sending everything PDF. This will be all through DocuSign or some form of DocuSign. I know we've talked to attorneys in the past, and they're concerned about that because it's a electronic signature and not a wet signature. But as this industry increases in technology, more people are going to the electronic signature. So I'm comfortable with that. And then my third partner, he's had a development construction company for 20 years. So we already had a lot of policies and procedures in place for that company. And we're just helping instill a little bit more structure around those. And since we've developed or are developing over half of our asset or half of our units, that needs to be sound, and we need to make that like clockwork. You can't obviously do that with the cities because each city operates differently and has different timelines. But from the actual development, doing the groundwork to the putting in the tenant, that can be like clockwork.
So you said the first thing you delegated was the accountant, which I think makes probably the most sense because that's probably the easiest, I would imagine. So did you hire like a CPA or did you train somebody to do it?
Well, we have a CPA, and they specialize in real estate, but we also hired a bookkeeper, and she had an accounting. Well, she's an engineer, but she had an accounting background for years. So, and she had experience in QuickBooks, which we use QuickBooks for all of our accounting. So it was a really easy transition to bring her in, and she could run without much supervision. Obviously, some things you think in your head you don't communicate, and that's one reason we're starting to put in just different procedures, and like how just naming files in a folder, having the same naming convention in every folder for every entity or project helps out. And we implemented that probably 6 months ago. And it saves you time from looking at documents where they might be somewhere and they aren't, or you think it's somewhere and it's in another place.
So where do you start with that? Do you try and build the whole system at first, or you hire the bookkeeper and then start saying, okay, well, every time you make a folder, let's do it this way, and then just kind of do it as mistakes happen?
Ideally, you would like to start out and plan out everything first, but realistically, I think that's impossible for any business to do. I mean, we've done 10 to 11, about to start our 11th project in about 3 years. So I feel like a lot of times we're running with our hair on fire. So at least we haven't been able to set out everything and then do it. It's trial by error. Some is mistakes. Some is just once we do something, we realize there's a more efficient way to do it. Like underwriting, I've been underwriting apartment deals for about 10 years, but it ramped up in the last 5. So even over those last 5 years, I found ways to be more efficient in underwriting and different things like that.
So are you outsourcing underwriting, or are you still doing that?
No, I'm still doing that. That's personally one of my responsibilities. I would like to outsource underwriting, and maybe it's just a control thing, but I know a lot of people will outsource to virtual assistants overseas, and I think they could probably do a lot of the upfront data entry, but to figure out cap rates and different things in different submarkets, they might not understand all those techniques. But we're in the process of, or we're talking about who our first employee is going to be full time. And that's one of the things we're trying to decide if it should be more asset management underwriter or if it's going to be more of a marketing type person. I'm very comfortable underwriting the asset management side, and all 3 of us really don't spend much time on marketing. All the capital we've raised have come from relationships that we've previously had. So the marketing might be the first direction we go.
Now, you said you created some procedures for your property manager. How do you decide what's crossing the line of managing, of micromanaging your property manager and the things that that's the reason you hired them, is to do some of that?
It's really a tough balance, and I don't have the best answer. We actually we're in the process of letting one property manager go just because they weren't doing the job that they should have been. And we had another property manager where we agreed to exactly how each unit turn was going to look. And they were sending us pictures initially, and I went and toured a couple units and everything looked exactly like we said. And then 6 months go by and I realized that the units were looking different than what we had agreed upon. And you have to trust that they're doing their job, but you also need to verify. And I think it depends on the property manager's personality and also the company. Some need to be more micromanaged than others. Even within the same company, I deal with two different regionals, and their personalities are different. One I think is a lot more hands-on, one's a little more hands-off, and so you just kind of have to gauge really who you're dealing with. But I try to have weekly calls with every property manager. We obviously have monthly communication from the financials and looking at the financials. So you just have to gauge kind of their limit, because you don't want to micromanage, because at least me personally, whenever I was micromanaged when I was in corporate America, I started to perform worse and just kind of shrink up. So I never want to put that on any property manager, and always ask for feedback and get the feedback, and if I mean their expectations or if I'm overbearing or things like that.
And then you talked about an investor portal. Do you mind sharing which software you're looking at?
Yes. We looked at several. I think we looked at 5, and we decided to go with IMS, which is Investor Management Systems or Solutions. It seemed like they were on the more expensive end of the systems we looked at, but I felt like their software system was the most robust by far. And to where we want to go, I don't want to implement something and then a year or two down the road decide to re-implement or implement another system because it just has more capabilities. But from all the ones we looked at, I don't want to say any of the other names just to not badmouth them, but I thought theirs was by far the best for at least our needs.
Yeah. I mean, I think it's critical, especially when you got, the volume that you've got. I mean, it's, so you want to look professional, you want to look like you know what you're doing, and just kind of having it haphazard doesn't really work, but that's part of a system too. So that just has, they're interested, so they come on, and then they say, okay, well, they can look at all the documents that you have available to them. They can click where they need to, and then when they're ready, then it's right there. They don't have to call you or email you. They just go on their portal and say, okay, let me sign the PPM, and we're good to go.
Yeah, and now we've gotten some referrals, and like during the capital raise process, obviously we have a PPM and we have a great business plan and a nice slide deck, and it looks professional. And then when we send out the subscription documents and everybody's having to sign it with a pen, or some will do electronic signature, but it's not all from one same system. They send this documents back, and they're all out of order. They'll only send certain documents back when they should have sent the entire package, and it just made a lot more work for myself. So I think it's going to take down in my time just from dealing with kind of petty hourly work that the system can easily take advantage of and remove that hardship, or you could bring in an hourly admin type person to do.
Yeah. So your SOPs that you're creating, how are you storing and organizing them so they're searchable and so forth?
Right now, all of them are written out in Word, and then the underwriting template is in Excel. That's how we underwrite deals. I've started thinking about possibly using Zoom or another software to record it. And I think that might be more interactive, and you can explain a little bit more than just cut and dry typing it out. I've talked to several operators, and they're starting to do that for their protocols and operating procedures. So I think that's where we will probably transition to in the future.
Yeah, it makes sense. You could host them on, there's a website that just specifies on hosting training videos.
I'm in a monthly mastermind with 4 or 5 different operators. And one of the guys said that probably 2 or 3 months ago. I just can't remember what it was, but I plan to go back through my notes and look and see what it is.
Okay, so that's exciting. So moving forward, what are some big procedures that you want to tackle?
I think moving forward, like I said, since we've completed or in the process of completing 10 projects in 3 years, my 2 partners and I have kind of overlapped in different duties. And frankly, Michael and I, we have very complementary and similar skill sets, and some of the things he does, I do, and vice versa. And if he's out of town, I'll handle it. And if I'm out of town, he'll handle it. So I think we're going to get down and just write out exactly everybody's job duties and functions. And from that, then we'll start basically creating job titles for employees or job duties for employees, and
Yep.
have like 20 tasks that they need to do on a regular basis, and then decide which four are the most important and probably hire based on that. But I think after we have the investment management software implemented, the next phase is we'll go over to the development side and look at all those processes and documents and spreadsheets and everything that they have, and look at either software to implement to help expedite all that, or just try to refine it, because we've realized we need to have a niche market, and we can do something that most people, especially probably 95 or more percent syndicators, can't. And all of our developments have been in tertiary markets, and they've done really well for us. So I think we're going to start focusing and trying to attack that before other people do. And that will be more from a development side than an acquisition side.
Interesting. So do you get a lot of funding from the local governments to do that?
No, we haven't got any funding yet. Luckily we just are able to structure the bank debt and then raise the equity, and then we put in equity, obviously, where we haven't had an issue raising funds, but we usually raise on the smaller deals, because all the developments we've done are 48 to 68 units, except one is 252, and that we had to go through a regular syndication process. But all the other ones, we've been able to bring in one large investor, two investors, and kind of get the capital taken care of. So it's easier to do than syndications, and it's in some ways it's quicker, but the time frame just takes a long time. But I mean, we've acquired one property this year, and I've underwritten over 100 deals. So it's hard to acquire assets as well.
Yeah, it certainly is. So how would somebody get a hold of you if they needed to get a hold of you?
Yeah, thank you for asking that. The best way to reach me is sam@trinitycapitaltexas.com. I'm also on LinkedIn and Facebook. And then if you want to call me, I'll be glad to speak with you. My number is 972-855-7654.
Awesome. Well, that's some excellent information that you gave us, and I hope our listeners will definitely enjoy that as much as I did. So appreciate you coming on, Sam Bates. It was a pleasure.
Well, thank you for having me, and it's always great talking to you, Reed.